All right, everybody, welcome back for another deep dive. Today we're tackling the world of investing,
Ooh, interesting.
and particularly some wisdom from Warren Buffett on index funds.
Okay.
We've got a great excerpt here from a CNBC interview
Okay.
during his company Berkshire Hathaway's annual shareholder meeting.
Right.
And, kind of the big question we're going to be looking at today is, can a simple strategy like index funds really outperform actively picking stocks,
Yeah.
even through, major world events?
All the ups and downs.
Exactly. So let's see what the Oracle of Omaha himself has to say about this.
Sounds good.
So right out of the gate, Buffett really kind of throws down the gauntlet here.
Yeah.
He tells this whole room full of investors,
Yeah.
forget about trying to time the market.
Okay.
And instead, especially for those just starting out, he suggests putting your money in a low-cost index fund and just letting it be.
Interesting. So he's really advocating for a hands-off approach.
He is. It's
Yeah.
kind of counterintuitive, right?
It is. In a world of constant market analysis and all these predictions, it seems almost like a bold statement to just say, take a step back.
Yeah, almost like going against the grain of like the whole industry.
Exactly.
But he's Warren Buffett, so we got to listen.
True that.
So to really drive this point home, he uses this incredible example.
Okay.
He says, imagine someone invested $10,000 in an index fund back in 1942.
Wow. So we're talking like way back when he first started.
Exactly, like the very beginning.
Wow.
What do you think that would be worth today?
I don't even want to guess. Let's hear it.
Over $51 million.
What?
51 million.
That's insane.
I know, right? That's mind-blowing.
It makes you rethink your whole approach to investing.
Absolutely.
When you hear numbers like that.
Yeah, you're like, am I doing this all wrong?
Yeah, for real.
And this is what Buffett is really getting at here.
Okay.
This is the power of long-term,
Yeah.
consistent investing.
The long
game. That's it. And it's all thanks to this magical thing called compounding returns.
Right. So can you break down what compounding actually means for us?
Yeah. So basically, compounding means you're earning returns not just on your initial investment,
Okay.
but on the accumulated gains year after year.
Gotcha.
So it's like a snowball rolling down a hill. It just gets bigger and bigger.
I like that visual. That makes sense.
Okay, so we've got compounding down.
Mm-hmm.
Now let's break down the other big term here.
Right.
Index funds.
Yes. What are they?
So an index fund is basically a basket of stocks
Okay.
that's designed to mirror the performance of a specific market index,
Okay.
like the S&P 500.
Right, the S&P 500. For anyone who's not familiar, it tracks the performance of 500 of the largest companies in the U.S.
Exactly.
Yeah.
So instead of, sweating over picking individual winning stocks, you're essentially investing in a slice of the entire market's performance.
So diversified.
Spreading the risk. Exactly. And that leads us to another point that Buffett makes, which is really interesting.
Okay.
He says, this kind of investing requires faith in America's long-term growth.
Okay.
He actually points out that the American economy has weathered so many storms over the years. Wars, recessions, political changes.
Ups and downs.
Ups and downs.
Yeah.
But through it all, it's consistently moved forward.
Right.
He calls it betting on America's economic engine.
That's a powerful image.
It is. But does that mean index funds are only for like the super patriotic?
No, not at all.
Okay.
It's more about understanding that this kind of investing is tied to the overall performance of the market you're tracking.
Right.
If you believe in the long-term potential of those companies,
Okay.
then yeah, it could be seen as a bet on their success and by extension, the whole market.
So to kind of sum up what we've learned today,
Yeah.
Warren Buffett, this, titan of investing, is actually advocating for a surprisingly simple approach.
Yeah, keep it simple.
Keep it simple.
Yeah.
Pick a low-cost index fund, hold on to it for the long haul, and believe in that power of compounding.
Trust the process.
Trust the process. And he makes it very clear he's not saying that all investing should be passive.
Right.
There's definitely a place for actively picking stocks and managing your portfolio.
Yeah, if that's your thing.
But what Buffett's really highlighting there is the importance of having a core diversified strategy.
A solid foundation.
A solid foundation. Especially for new investors.
Absolutely.
So as we wrap up this deep dive,
Yeah.
here's something I want you to consider.
Okay.
Does hearing this from Warren Buffett change your perspective on investing at all? Could there be room in your financial strategy for this, Buffett approach? keep exploring this topic.
Yeah.
Learn as much as you can.
Keep learning.
And remember, finding the right investment strategy for you is all about aligning it with your own personal goals and risk tolerance.
Your own individual needs.
Your own individual needs. Thanks for joining us for this deep dive into index funds. We'll see you next time.
See ya.